What we need now is another push through this level, and we have a new supply to sell from. If you're 50 or over and you're struggling with a top-down analysis to create that financial future for yourself, I'm going to go through current previous price to show you how you can use a top-down analysis from a daily, okay, on the USD pair down to 15-minute entry this past week. So first off, before we do anything, we have to start with the higher time frames. It's important that you are looking at those higher time frames when you're doing a top-down analysis. You need to understand your bias, where the market is potentially going. So looking at the daily, we're going to mark up on these charts the structures in the market. We're going to look at a swing and internal structure and potentially look at a fractal structure. All of this will make sense when we go through towards the end of this video, how you use all of this together, and we'll mark up our supply and demand zones where we look for potential reversals in the market and our entries, as you'll see towards the end within the entry of this video. So first off, let's look at a market structure. We can identify we have a break of structure here to downside. Let's just change this to break structure. So in fact, let's not go this far back. Let's go to where we see this breakout here. That's fine from here. We don't need to go that far back in time. So we see this break of structure here to downside. The market then needs to run this low after the pullback. So we see this pullback. We have some internal structure here, and then we run through this weak low once again. Then we have a new weak low created, and we're looking for basically an area up here of supply to hold to push the market back down to run this low. Now that has failed. Price has not run this low, and we've run back higher, eventually running through this high here, reversing our structure. So when we see these higher lows forming and we run back through these highs, it's a very, very good indication that the market's going to reverse structure. And when we see this pullback, you can start to look for those buys. But this is what it's about. This is about doing that top-down analysis. So from this point, we understand that the market has reversed structure and we have a bullish move to the upside. That's our swing structure in the market. We had this last era here of potential supply. You can see that's got run through to the upside, and then the market has bounced from this area of supply. So that's where we're having that reaction from. That's why you're seeing that reversal happening. Look, price has to either run swing highs or lows or come into supply and demand for us to see those reversals when we're using a supply and demand approach with a top-down analysis. This is how you can secure a financial future for yourself once you understand how to apply these concepts correctly. Now, if you struggle even with a use of a market structure, understanding the different types of structure, and what I mean is we also have within here an internal structure. If you struggle understanding this, then there is a playlist within the channel that goes through market structure. Full playlist will cover all these different types of structures, and it's going to help you to realize how we use this in trading. As the market continues to push higher, we break out once again, and we break out here again, and finally, oops, let's just put that back, and finally we break out right here as well. Then we reverse structure here to downside. Now this is current price. This is what's happened for the week. So before we continue to the lower time frames, I'm going to use the replay mode so I can show you how to read the structure through the lower time frames. At this point, we would not see this break of structure. Let's say we've just seen this last break to the upside. We'll go through that in a moment, and we'll go through how you can read price. But this is understanding the two different types of structure. Okay, so it's understanding how to read the market as a structure and where those areas of supply and demand sit. So we have an area of demand remaining here where price is likely to want to pull towards next. We had a previous area of demand, price has bounced off. Okay, now when we're drawing demand, we have different types of zones we can mark. We can mark a pivot zone or the range. Okay, now again, there is a playlist within the channel which will go through to demonstrate to you in more detail how we look at marking those areas. So potentially we could see just a pullback into this demand and then another run higher. But for now, we're interested in reading the current price. We know we're coming off this area of supply, which could indicate a pullback. This is our internal area, okay, moving up. Now, it doesn't break until we remove this low. That means it's showing me a potential swing pullback, which could be the swing pullback from this low in the market to this high for a pullback before we run higher. That is what we could be witnessing right now. This becomes now my strong low in the market. And then we'll be looking for price to continue to move lower to find price pulling back into an area of discount down here. So let's now go down to, let me just make sure this is on the same time frame, make it easier. And then we're going to go to a replay mode, and let's go from where we start to see the market pulling back. So we're coming into this area of, okay, it's going closer, area of supply. We do have this area of demand created that we can mark out. This is where we see the demand. Okay, we can mark it from the high of that candle there, where we see the push out. We can see prices holding at this demand. But now what do we have? We have price trapped between the supply and the demand. We do not, and let me repeat this, we do not want to buy into a supply or sell into a demand. Now, if you can remember those two things, then it's going to increase your profitability in your trading so much more. Now, what I'm talking about here are the high time frame zones. Okay, so right now we're stuck between zones. We're not really looking to take a trade. We want to see what's going to happen. We need to see if we're going to reverse through or head higher. Now, if I go to a 4-hour time frame, let's just get everything marked up ready. So straight away, we can identify where we had the market breaking structure here to the upside. That's our first break of structure, okay, with the 4-hour, we can see there. Another break higher. We move up, we make another swing pullback, a smaller pullback. You could say this is even more internal move all the way up here. So this could be a full swing. And what I mean is, we can see this is a push up, a pullback. This could be a full push up and then a pullback before another move higher. But let's look at this as just a swing at the moment. That leaves an area of demand that we can mark here and an area of demand that we can mark here. Okay, but we also have some smaller internal breaks here that we can mark out as demand zones, right? So we have a demand zone we can mark there, and you have a demand smaller zone you can mark there. Now, they're not going to hold as much weight, these zones, as the, okay, these larger swing zones. So these pivots in the market. So we just mark all this out on the one time frame. And this is how you just do your current, okay, structures and your zones in the market. It's all you need to. You don't really need all of these marked out. You just have the last couple and the areas of supply. Now, if we look back as well, we can identify, let me go all the way back. Okay, so we can go closer into this area here on price. We can also identify we have this move here, this range area here of price. Now we can mark this out and we just send this off to the right. So we can look where price is coming back. Let's go back to here. We're reacting now off an area of supply above. So we're really looking for price to drop back towards this demand for potential move higher. Or we could be looking on the lower time frame for potential short to the demand. This is what we class as a counter trend move. Now we do have space to move to the 4-hour from a 15, but remember we don't have any space to trade off a 4-hour because we're sitting inside demand on a daily. So that's where you need to start understanding those multiple time frames. If we also just mark out these zones quickly on a 15-minute, let's just put this on below. Now we're going to move down to 15-minute. Now we have all the information on the higher time frames we need. We know where price is with a top-down analysis at the moment. We're looking for price to pull back to demand to look for a buy back up. Now we can do this on a 15-minute because we have the space on a 4-hour, but we cannot look to sell, okay, and buy on the 4-hour based on just the 4-hour movement. So when we get here on this demand, we're not likely to really want to buy anyway because we're inside a demand and still inside a supply on the daily at that point. But we go down to 15. This will make more sense as we go down these time frames. Let's now shrink this chart down. And again, look, let's look at the bigger picture. We have a nice swing break of structure there. This creates a strong low, okay, and a new weak high in the market. So that's my current move. I didn't want to do that. Let's just change that. We don't need to worry about price from this far back. Let's now go into current era. Now we can start to look at this internal movement. So we have a break of structure here of internal structure. I can see we had a final push higher here, pushed through with this candle, and this is a push where it came from. We've now broken that structure. That gave me this as a new week low. We haven't yet closed through. We did near enough just wick through. That means we were likely to run through this high, okay, higher up, but we're not going to reverse this until we actually take out this high, okay, of the swings in the market. So we have an area of supply there. We dropped out, we retested it, okay, another area of internal move there. You can see where price is kind of like stacking off those areas as we continue to fall. And then again, we have another area of supply there where price has just run through. That means we're now holding within this current supply. We can also mark off this swing high where we've just run through. So how do we look for potential sell? We're looking for the market to run from here this low. That's what we're still looking for. We're looking for a potential sell. Now that does work for the fact that we're inside a 4-hour supply. We're inside a daily supply. Now I wouldn't be looking to sell after this sell from up here to this low. I wouldn't be selling then, okay, because we're coming into the 4-hour and already inside that daily demand. That's it. We're not selling inside demand, remember. So we can sell from the supply on the 4-hour, from the 15, and from the daily down. Once we've taken that, then we need to start looking at the top down again, deciding our bias. So from here, I'm not saying we're going to have a sell, but this is a nice potential reversal candle where I would say we could look to sell this market. If we was just to look to take a break of the low, stop of the high, to run this low, that in itself is a pretty good trade. Let's just go with that. We could see a push higher again from here first, and we want to see a break of these lows just to see the market pushing through. A nice push through here with a nice solid candle. We want to see an expansion move to downside. We can see we have a start of an expansion move. Now, if I'm looking for a reversal, this candle pushing through created an area here of what we call a fractal reversal. Now, that does tell me that this has created an area of supply here where we're now bouncing off. But just to show you can either take a trade off this supply area I've got created from this reversal, or we can look for a breakout entry. We're just going to go with a breakout entry here, but we could take an entry as well off that supply. We run the trade forward, see what happens. We've been triggered in. Hey traders, we'll get back to the video in just a moment, but I wanted to give you a gift for hanging out with me today. I want to give you access to my Telegram community. This trading community will share my chart markups and give you access to my trading strategy. But it's more than just a community. You're going to have some actionable steps to accelerate your growth with hanging out with other like-minded traders, all looking to improve their trading. And it's free as my gift to you. So just hit the link above now to join the Telegram community. Now back to the video. And we start the move down. So you can see we had the market moving sideways. We did hold at this area of supply. Okay, so you could have taken an entry earlier on with a larger risk to reward. Nearly, in fact, you could actually nearly a 6-to-1 risk to reward compared to the breakout for 3-to-1 risk to reward. That's how you would look to take your trades, understanding supply and demand. Now the market's starting to break down. So you can see how we've created that shift right there to the downside. Let's continue forward, and you'll be looking for this to hold to run for this low down here. And again, that we push down, you can see the continuation as the market pushes lower. Another quick push down as well. So we continue to be bearish there. So you look for the market to continue to push lower, pushing through these lows. You want to see the nice expansion to the downside. Okay, so this is just reading that moment. Now we've pushed through, there's your trade done. Okay, so now we're not looking to take any more trades there. We've taken that sell based off, we go to the 4-hour, okay, coming out of this era. Okay, so straight away we see the reversal on the 4-hour, pushing out of this area on the 4-hour supply. We've dropped down, we see the pullback, we've got an entry here on the lower time frames to run this low here on the 4-hour, and we're looking for the market to run towards this area of demand anyway. Now, obviously, at the same time on a daily, we know that we're looking for sell out supply, but we are inside demand, but we can take this sell on a 15 based on the 4-hour movement. So if we now go back to that 15-minute, that's a great trade, okay? Over 3 to 1 risk to reward, understanding your top-down analysis to take a trade. Remember, this is how you secure your financial future, especially if you're heading towards retirement. Trading is a great way to understand how to create a financial future for yourself. Now, this is simply going through the current previous week's price. I'm not going through, okay, showing you back a year ago, okay, and finding a trade I can pinpoint to show you. This is showing you last week, and there's a couple of trades that could have been taken. This was the first trade that could have been taken, and I'm going to go through the next one. Now, you're following the price at this point. Go back to the 4-hour. We've just broken this internal move to downside. We're expecting price to run to this area of demand next. So we're just going to go forward with a candle. Okay, so there we go. We pushed, next candle pushes into the demand. Now, if we go back to a daily time frame, remember, it's multiple time frames. What are we now doing? We're now sitting inside this demand, but look at the strong push to downside. Not the best. And if we actually see the market pushing through this level, okay, we're going to see a reversal of that internal structure to the downside. So let's go back to the 4-hour time frame. Now we're inside this demand. Do we want to buy? Okay, well, we could see continuation of the 4-hour from here back up to run this week high. But remember, on the daily, where are we coming out of? We're coming out of supply. So for me, I'm not happy now to buy or sell. What I want to see is the market to shift its bias, to show me that we can then pull back to continue to sell to the next demand below. Why? Because we're coming from a high time frame supply. So again, let's look at what happens on the next candle on a 4-hour. I don't care if we push higher, but if we look at the candles here on this approach to downside, you can see the expansion to the downside, which also tells me we will run this demand. And in fact, let me just go back to daily so we don't get mixed up. Let me just have this level only on the daily. Okay, so let's look, see what happens in the next candle. Okay, so we have a small inside bullish candle. We haven't really done anything yet. And we continue to be bearish. No, we've swept the low. So at the moment, we are stalling at this area of demand. Now, why does this happen? Because the orders are there and potentially we ran this low right there. Okay, so we ran that low, swept the low, pick up some orders left over below this low, and we're having a reaction. And yes, we could pull back. But again, I'm not interested in it. Let's go forward with another candle. Have we pushed higher? We've started to push higher. We're slowly pushing higher. And there. And that is how you lose in trading, when you're not reading the price correctly. Look at this. An expansion move down. A small retrace. An expansion move down. Where we push into the next area of demand, but we've gone right to the low. I would say that's probably nearly removed that demand. Let's have a look. We've got a low of 719 and we've got a low of 718. So it's 1 pip away, but that's not the best looking area of demand. That's holding price for me. I expect it to break anyway, based on what? Based on this big candle. Okay, I can go to the daily, 15. And we can see what's happening on the 15. We can see the momentum drop, that big expansion to downside. Okay, what are we doing on the 15 now? Well, let's remove this level. We're now pushing lower, okay, and we're breaking this structure. That internal move to downside, leaving this as a new strong high. So the market could potentially pull back here. And yes, this could be another potential sell. But why could this be a sell? Let's go back to the 4-hour, because we've broken structure. Okay, so we had this push up here. We've now broken the structure here to the downside. And that's why we can now look at this as a potential reversal in the market. back to that 15. Hopefully this is not too complicated. If it is, don't worry, go back and watch it again. Okay, you can watch this video as many times as you like. And of course, you can drop a comment below and ask any questions. So at this point, if we're to hold at this area, okay, of demand and pull back, we could look for another sell. Let me just go through and you can see the structure where we continue to push down. Okay, so we have the main swing structure. Let me just mark this out. This is a strong high. Let's mark out the break. This is the break. Okay, so new break of structure, and we'll just get rid of this. But that's our swing move. Where's our internal structure? This is our internal break to downside. This was a break, a retest from there. We push lower, pull back, and we create this sweep right here in the market. So we had a nice sweep. As we pushed down, we broke structure once again. We have this range area of supply, and then we have this drop base drop area of supply here as well. So it's a good sign that we are holding. We haven't run the area of demand, so we could see a rally up from here. So let's just go forward a few candles. Okay, so it's showing me a start of a potential retracement. Now, if I'm looking for a retracement here, I want to see the market running above this 50% area, okay, pushing back into premium prices. Let's just go forward. And look, the market has now done something which is not what you want to see. We saw an expansion move down when we failed to run the low. And that indicates already that we're likely to want to push higher through this high and go deeper into this move or this swing, this internal swing to downside. So the market, in fact, has pushed through. So we never got the pullback, and now we run through. So we had an expansion move, pullback, expansion. At this point, we're not looking to sell because we were looking for price to pull back into that area. And we didn't get that. And this is how it keeps you out of taking trades sometimes, which could end up being a losing position. Now let's go to the 4 hour. Reading the 4 hour candles, we now can see we've wicked through this demand and removed it. So where does that mean we're likely to head to? We're likely to run for this demand below. Okay, now the actual demand zone, you could mark off that small bullish candle. So we have space to continue to run for this demand. And we're likely, because we wicked through the low of this one, we're likely to see a continuation down before we see any type of a pullback. This is where your top-down analysis is going to help you. Back to a 15-minute time frame, and let's follow the 15. What do we have now? Well, now we have a new break to the downside. Okay, so we follow structure once again. Okay, we never came back to the supply here, but we've now created this drop down area of supply you can mark out here, which we have pushed into, and we had another small drop out there. Let's go forward price. So we're seeing a pullback, and again, this is the internal move. And we can push this back, and we'll mark out a new, let's keep that there. Let's duplicate that, and we'll mark out a new swing low. So this is now what we class as our weak low in the market. So we have a drop, pullback, continuation. Now we can still run above this high, but this is now our current area to watch. So you can see we're already within that premium area of price, but we kind of want to see price running through some kind of high. So at the moment we haven't run this high. So let's just make that a area. I want to see the market sweeping. We've got no areas here that we've pushed into to find an area to trade from. So this is what we're now looking at. Let's go forward with price. So if we was to run through this low here, okay, I'm going to miss the trade because I want to see the setups that I want to see. If they don't come to me, I'll leave them. That's why I didn't take any trades up here, which still worked out and we ran lower. We came into this area of supply, okay, on this fail, this pullback, but I didn't take it. It didn't set up how I wanted it. Let's see what happens. Okay, so we're running lower. Again, we may not get any trade here. And now we're starting to see a potential move higher again. So what am I looking for? I'm looking for price to run this high deeper into this tested zone of supply. Then I will look for potential sell to run this weak low. And that's all we're looking for. Looking for that. Now, if we push through this level and we push through this supply, then I may not be looking for a sell. The only time I look for a sell is potential sweep of a supply zone of this previous high. That's because we have a nice big area of imbalance that the price may want to push into before we push lower. Now, this is how you secure your financial future with the use of trading and a good money risk management. Okay, so we're pushing low. Let's go forward. Now, it's important to understand we're inside London right now, about to come into London. This is where we're going to see any types of manipulations in the market where they're going to sweep those markets, and we can see a push up into this supply. Let's just go forward. Let's wait until we get into London. Okay, now we're into London, and we get a push up, above these highs and a potential close back down. But remember, what am I looking for? I want to see a push deeper into the supply. Let's go forward a candle. Okay, so now we're getting that push up. Okay, and this is where London is going to bring in those sellers on the lower time frames to manipulate them out of their positions, and you have losing trade. And this is why you're becoming a struggling trader, not reading those price. And with a top-down analysis, it's so important to know where everything is with your higher time frames. Why are we looking to sell? Because based on a 4-hour, we're looking for price to come to this demand before we even see a push higher. Very, very clear when you're understanding multiple time frames. Now, if we just pop to daily, you would understand what's happening on the daily, but I'm not going to go through the daily until the end because it's going to show you price action already on the daily. All I want to show you is on this 15-minute, how we can catch another trade now. Again, this was just the previous week. Let's go forward. Now, we've just wicked through. That's great. I don't have any setup yet now to sell. So let's keep going forward. We pushed up higher, and that's a good solid push in. Now, if we need to see now is a nice strong drop. And what we have as we push in, we have our area we can reverse at. Okay, this is understanding my fractal structure. And there is a video playlist within this channel, goes through all the fractal structure of understanding it. Now let's see what happens in the next candle. Do we have a nice expansion move? There is a nice expansion move to downside. That's reversing out of this area of supply after pushing through this high. What we need now is another push through this level, and we have a new supply to sell from. Okay, so that gives me my supply. There's my new supply zone. So I'll be looking now for entry here to target this low. Okay, very, very simple. We look for entry off this area of supply, stop above the high, and over 3 to 1 for the low. Now, because we know price is likely to push through this low to go where? Towards the demand, we could extend it to this area even for 4 to 1. But we're looking to take a good 80% off your trade at this low to start with. Let's go forward and see if we get triggered in. Okay, so we pull back, very close to coming into that supply. We may not get triggered in. We're moving sideways, and we've pushed up. And again, look what's just happened. We swept this high into the supply of this move, and then we're creating a start of an expansion move to downside. We're moving sideways, very choppy, and there is the expansion away. That's what you're looking for the continuation. So now we should run this week low, reading those candles, and there we go. So now we've just taken 80% off the trade here, and we'll be looking to hold to run towards the 4-hour demand. Now back to the 4-hour time frame. This was that demand, remember, off this key area. Just mark that out of that candle. Back to 15, obviously you can see now what's already happened, but we just play it forward. We can see price does come back in, okay, to the zone, and then we push into the area of demand. So what is happening here? Why did price come back? Okay, very, very simple. Okay, what happened is the big drop down leaves an area here of imbalance in the market for price to pull back into. Now, imbalance is a different concept, and how we use it is slightly different to supply and demand. But it's a great way to add extra trades in your trading. Now, what you can do is you can understand that you can look to take an entry off the low, the 50%, or the high. The majority of the time, taking an entry off the 50% is a great strategy with the use of imbalance. Now, here we've got nearly 2 to 1 risk to reward, which is fine. So we have a 2 to 1 risk to reward, and then your final target is nearly 3 to 1 risk to reward. So that is how you can use your top-down analysis. Now, if we just pop back to the 4-hour here, we can see where the 4 hours pushed through into the demand. Go to the daily. You can identify on the daily where we create that reversal, okay, of the structure. So we go back to the 4-hour here, let's apply it forward a few candles. Okay, it's reading candles, we're still pushing lower, but it's an inside candle. Now we've pushed deeper, swept the low out of the demand. This could start a potential pullback. Okay, if the demand holds, and especially when we see price holding at this high, this candle, where we've not pushed through this imbalance movement, we could see price head higher. And again, if we go through to the next candle, what we're seeing today, we're seeing a push up. Okay, so we're seeing that move to the upside. Price will likely now need to run higher and run this high first to continue up. And we could see a full swing pullback now on the 4-hour, which means we're going to see on a 15-minute a potential reversal. Okay, we could now see the market reversing structure and heading higher. We do have this swing down. Okay, so we're still within this swing, and we do have higher areas of supply we could look to sell from. And we even have a leftover imbalance sitting right here in the market. But that's how you do your top-down analysis when you're looking for a trade. We've gone from the daily to the 4-hour and the 15-minute. And like I said, if you have any questions, okay, then do leave them below within the comments of this video. And if you're not sure, keep watching the video a few times. It's going to help you. And this is how you will secure a financial future for yourself if you're looking to go towards retirement with trading in the markets, using just market structure here, supply and demand zones, with a top-down analysis. Now, if you want to learn more, okay, for your trading, I do suggest learning more on how you can look at order flow with a supply and demand, and you can watch that video. It's going to be coming up right now for you to go through and check out.